is no shortage of dividend funds. What makes the Smart ETF's Dividend Builder ETF special?
Dividend investing comes in a variety of flavors. Some dividend investments focus on high yield, others focus on a more moderate dividend yield and dividend quality. Some dividend strategies are only concerned with the dividend history, meaning they are entirely backward-looking. In creating and managing the Dividend Builder ETF, we put a lot of thought into how we select our holdings and, importantly, how we construct the portfolio. We believe the selection criteria and portfolio construction of DIVS sets it apart. First, let's talk about how we decide which stocks to invest in. The initial universe is nearly 16,000 publicly listed companies from around the world. From this universe, we seek companies that have demonstrated an ability to consistently generate a high rate of return on capital. Specifically, we're seeking companies that have generated a 10% or greater return on capital for each of the last 10 years. Notice the requirement is for each of the last 10 years. This is a consistency in the rate of return that is hard to match, and indeed, only about 700 of our 16,000 companies achieve this. Next, we eliminate companies with a market capitalization of less than $1 billion and that don't have a strong balance sheet. We specifically avoid companies with high debt levels and prefer companies that can finance growth without excessive external financing. Typically, we want our companies to have a debt-to-equity ratio of less than 1. Taken together, these criteria give us a tangible definition of quality. Quality isn't just a history of dividend payments or a big brand name. Quality has concrete metrics and ideas that guide us. Finally, the companies in our universe must pay a dividend. After applying these criteria, we are left with an investable universe of approximately 600 companies. From this list of 600, we're looking for the very best 35. The process involves fundamental analysis, assessment of return potential, risk analysis, review of competitive advantage, and market sentiment. For each of the companies we're considering, we create a financial model. These models contain hundreds of data points and can cover 20 or more years of financial data, both past and future estimates. Our financial models are built using a consistent format so that any of our analysts or portfolio managers can quickly compare data across companies. Importantly, it isn't sufficient to be a quality company. Valuation matters. The winners that we identify ideally offer a discount to intrinsic value, offer a sustainable dividend, and have a better risk-return profile than a current holding. This last point is important and leads us to our portfolio construction. We purposefully restrict DIVS to 35 holdings. By holding the portfolio positions to a constant number, we gain a sell discipline. If we find a stock we really want to add to the portfolio, we must first decide which holding will be eliminated to make the addition. The portfolio is approximately equal weight, which means we seek to keep each position in DIVS to just under 3%. This portfolio construction is different from many managers that hold more positions and weight by market capitalization or simply overweight their favorites. Our view is that that approach adds stock-specific risk and often means performance is driven by a limited number of holdings. We believe these are the things that set DIVS apart from other dividend ETFs. As mentioned, some dividend funds invest to maximize high current income. That strategy may be preferred by some investors, and we understand that. But we don't believe chasing yield is a good idea for most investors, and we manage DIVS with a focus on quality, which to us is found in the financial results, not the historic dividend. All of this is to say that we believe the Dividend Builder ETF and our focus on moderate and growing dividends, its quality focus and portfolio construction is special. But the proof is in the pudding. We invite you to review the performance and see for yourself what makes the Dividend Builder ETF special.